Welcome, everyone, to another webcast. Cary Williams from North Road Investment Counsel here with my colleague, Marshall. Marshall, we're recording this live in a fast 15. So much has happened today and this week. I think we're just going to jump right into it because it has been a very busy week, and I know clients are looking forward to hearing from us. So, as I think everyone is going to know, tariffs implemented today. And we're going to walk through what this means, what happened in the markets, and what we can think about for the future as investors. Marshall, I'm going to run through the market reactions here as to what happened today, the last little bit. Tell us anything you want to add before we just hop right in.
Well, I got it at the outset, the idea that you and I could have predicted a second Trump presidency, and that we'd be staring down the barrel of 25% tariffs from our biggest trading partner, the United States. This is not something that you and I would have predicted. And a lot of what we do within our professional practices is educating our client base and our team around the idea that we can't predict the future. And because of that, it leads us to invest in a certain manner. So today we get to learn about, what this news is doing to capital markets and how that's going to impact our decisions that we make on investing.
Yeah, Marshall, I have frequently told clients over the last 5+ years that I'm very thankful for the way you and I approach markets, because if I had predicted these things incorrectly, it would have been very, very painful. And I'm just so glad that we focus on diversification first. And we're going to talk a little bit today why. But even through COVID, I thought the same thing. So let's hop right in. Market reaction. Okay, 25% tariffs finally come in. TSX, Toronto Stock Exchange, minus 1.7% today. S&P 500, minus 1.2 today.
Yeah.
The last 5 days, minus 2.5 for the TSX, almost minus 3 for the S&P. So the US down actually more than Canada, which I think people would find surprising. Here's the really surprising stuff for me, okay? The all-world index, FTSE all-world index, outside of the US, down 1.2% over the last 5 days. So not as much as Canada and the US. Okay, maybe that makes sense.
Mm-hmm.
Year to date since January, Toronto Stock Exchange is basically flat. So since we've been talking about tariffs, almost flat. S&P 500 minus 1.8, so the US worse than Canada. And FTSE All World ex-US, so outside of US, plus more than 5%.
Yeah.
Who would have predicted that? I would not have predicted it.
No,
I wouldn't have.
That's right.
That's been, quite frankly, a relatively losing trade over the last decade, right? We wanted to be in US and we wanted to be in large tech over the last decade. And here we have the rest of the world doing better as we talk about tariffs. So just a total surprise to me, and thankful again for being diversified.
How about this, Cary? Would you have predicted that the Canadian dollar on the day that the tariffs would have been announced is going to increase in value instead of drop? No, it went up.
Not a chance.
Yeah.
And so, Marshall, you talk a lot about this. I'm going to turn it over to you to talk about how markets react to news and whether or not we can use that as an indicator of what's happening and what we should be thinking about.
Okay, so let's just think about corporate profitability. A stock, in its essence, is a claim on all the future all the future profits of this corporation. And if these corporations were going to be 25% less profitable, we would expect at its core that we should see a 25% reduction in stock price. That did not transpire in Canada. So what that's telling us is the markets are not expecting our corporations to be 25% less profitable, and potentially that this issue is not going to last forever. This is something that I hope for. I find these tariffs really frustrating and disappointing. I don't think there's a Canadian that's going to disagree with me on that. So how does that connect to how we invest? We still need to own businesses. We still need to own bonds, and we're going to be owning businesses from all around the world, regardless of tariff policies from Donald Trump.
Yeah. So let's hop in. Josh and our team grabbed a couple of slides really quickly, Marshall. Let's hop in and talk about and address the question that is coming up quite a lot, which is this feels one, tough to be optimistic about the future, and
Yeah.
two, totally unprecedented. And let's just address those couple questions. So let me share my screen. Um, Here we're showing the S&P 500, so US focused for now, 1950 to 2024. How often in a calendar year we see a -5% downturn in markets on the left side, then -10, -15, and -20. And we can see -5 happens very regularly. More than 90% of calendar years experience a -5 event. Okay.
Yeah.
-10% is like a flip of the coin. It's a little over 50% of calendar years see -10. Less common for -15, -20. But from the perspective of what we've experienced so far over the last couple of weeks, this is totally normal as markets adjust to new information. And I have to admit, Marshall, I would never have predicted that either.
Mm-hmm. Yeah, I would have suggested a much larger number.
Yeah, for sure.
And that might still happen.
Yeah.
Yeah, markets are never stopping their movements, but still, the information's been digested and prices have reacted.
Yeah, for sure. Okay, let's keep going on this same idea. Let's look back farther into history. So again, S&P 500 going back to 1950. We've got lots of historical events over this period that were really, really gnarly. That's my technical term for experiencing bear markets.
Yeah.
Gnarly, right? Is this unprecedented? I think people who lived through the Cuban Missile Crisis might say that was pretty awful as well, right? And there's been some really tough times since 1950 that have been incorporated into markets when it didn't feel like markets would come out the other side, and they have.
Yeah, for sure. I mean, this goes beyond our careers, Cary, but we can read how people were feeling in high inflationary events in the 80s. Early in my career with the dot-com crash. I mean, that was really tough, and this is a tough period, but we just are not seeing securities prices fall like we have in other events. So just a good chance to remind our clients like what we're dealing with in terms of kind of long-term investment philosophy and our thesis for sticking the course.
Yeah, agreed. Let's move out a little bit. Let's go to the world. So this chart shows world index back to 1970 to the end of 2024. The green line showing growth of $1, and all of these different events that have happened since 1970. Oil embargo, gold hitting highs, the death of equities in news on Business Week, all towards the left-hand side. And more recently, COVID and the subprime mortgage crisis, and lots and lots and lots of challenges.
Yeah. So can I say this? There's going to be some anxiety in our client base. That's not a question. We know that. And I think this is a good chance for us to kind of welcome extra conversations. We don't know how you're feeling. You need to tell us. And I think it's a good time for you to email us and say, hey, Cary, let's talk for 10 minutes on Thursday. Hey, McAllister, I need a half an hour, right? I'm coming in for coffee. Let's talk, right?
Yeah, it's a great idea, Marshall. So our phones are open. We've got a few meetings booked, as we always do. But if you reach out to us, we're gonna get back to you. Absolutely. I want to touch on a couple more things just before we let folks go. Okay, so I'm going to share my screen one more time, and then let's talk a little bit about adding some narrative. So what's the story that might explain what's happening a little bit? And then let's talk about key takeaways as to what we do beyond just, hey, Marshall and Cary, I need a little extra attention. Okay, so let's talk about when we do have tough markets, what happens in the future after that. So again, S&P 500, this time going back even farther, going back to January 1926. So incorporating the Great Depression. 1 year on the left, 3 years in the middle, and 5 years after the market declines by 10% average returns over those periods. So not every instance, this is average, but we still have positive expected returns. in this data set. So we still remain optimistic that markets will climb the wall of worry, as our industry likes to say, and reward risk taking over time, even though in the moment when risk is realized, it's pretty awful.
Yeah.
Okay. Marshall.
Yes.
Here's what I've been reading and thinking about. There is a lot to me that feels like it's hard to be optimistic reading the news right now. It feels like it doesn't make any sense. Why would our top trading partner and some of our best friends start to attack us? Here's what I've been reading that has made sense to me. Okay. I think part of Trump's core identity is a deal maker. I think there's lots of evidence from his book to even how he treated the head of Ukraine in his office this past week. Okay. Mm-hmm. Looking for a deal on Ukraine minerals, looking for a deal is part of his core identity. The USMCA, which is the modern version of NAFTA, the free trade agreement between Canada and Mexico and the US, was last negotiated under Trump in Trump 1.0 in his first term. Mm-hmm. In that agreement was a special clause that said there must be a joint review by all countries in 2026. So our free trade agreement is coming up for review next year. Mm-hmm. It doesn't seem out of question for me to have somebody who is focused on transactions, on beating people up, mm-hmm. on being a deal maker, to set the stage by creating some pain.
Yeah. Yeah.
Okay. I'm not saying that's what he's doing, but to me, that narrative starts to kind of make sense.
Yeah, absolutely.
Okay.
We've been used to being around polite world leaders, and I don't see, a lot of polite, kind negotiating happening. This is heavy-handed. This is bully tactics, and our leaders are going to have to deal with this, and it's going to be tough.
Yeah, for sure. The second thing then is the next round of U.S. elections is November 3rd, 2026. Mm-hmm. So that includes all of the House of Representatives, a third of the Senate, and 39 state and territorial governors. That's a big election. If President Trump wants to, one, remain in power across all those levels of government, and two, potentially increase his power, he has to get all of his initial work done, plus convince the American people that he's done that prior to that date.
Yeah.
So this speed at which things are happening to me starts to make sense. And yeah, it is really, really awful to have to go through this.
Yeah.
But that narrative to me starts to make sense as to, one, this may not be forever, right? This might be shorter term than it feels looking at the news. And two, there may be a bit of a reason for all of this happening as bad as it is for us.
Yeah.
Okay. Anything to add to that narrative?
No, I think that's a good kind of spot to end it, Cary. Nice recap. World's not going to end.
Yeah. Let's touch on core takeaways, Marshall. Like, what do you hope people do next?
Yeah, I think we can't be overly fascinated with news. I think our mental health needs to be, kept at a priority. I've noticed myself consuming more news than I normally do, just because there's just been so much of it. And I think I'm hopeful that the pace of change is not going to be keeping the same level for the next few months. But I can't change it. Even though I'm going to be changing people's lives in terms of how we build portfolios, I can't change what Donald Trump is going to do. So I think just kind of maintaining some composure with regards to world events and my power over them needs to be recognized.
Yeah, I agree with you. I think recognizing that we have massive diversification in portfolios, and we've looked at these historical data and news points as we build portfolios gives me more confidence that we could go through some challenging times, but our portfolios are really focused on reducing catastrophic events, if I could put it that way.
Yeah, exactly.
Right? And the third is, I would say it's okay to feel uncomfortable and sit on some extra cash in your bank account. increase your emergency savings, do those things that help you sleep at night,
Mhm.
help you get through the next months and, let's say year, as we get into 2026 and closer to these dates that may be driving some of the activity out of the current president. That's okay. But staying invested, staying diversified, we can't predict the future. If all of this changes tomorrow because the president changes his mind, markets are going to adapt to a whole new set of information. And that
Yeah.
might not be negative information, it might be positive. And
Yeah.
suddenly markets are going way, way up. So it's one thing to say what if and think about the negatives, but with markets, we also have to be saying what if and thinking about the positives.
Yeah. Absolutely.
Okay. That's good for me, Marshall. How about you?
That's good for me. We'll keep it on time. Thanks, Cary.
All right. Thanks, Marshall.